morning.
Got it.
I see you like
That one.
Yep.
There you go.
Five mics.
Like that?
That's like your escape.
All right, welcome everybody. You can definitely tell the lack of sun in the morning is slowing everybody down.
Yeah,
Because it was 9:26 and nobody was in the room.
I know.
They get here.
It's hard to get up in the morning and go to
Yep.
the gym when it's dark outside.
Yeah, that's my excuse. I need so many excuses for it. Welcome, everybody. So as normal, let's get the computer to work. If you're in the room, you need to find somebody you don't know. You got a minute to say hi to brand new people. If you're online, you need to send a direct message to somebody you don't know. Ready, go.
I know. Still
All right.
Well, you found a great letter.
All right, we'll try the volley thing. 1, 2, 3. It almost worked. Okay, as every week, we like to recognize our vendors and our affiliates that are here. So let's go around the room. You got about 30 seconds to say quick stuff about yourself.
Let's start with Derek. We're gonna go the reverse.
All right, switching it up on me. Derek Cheney, the home loan expert with Mid-Missouri Bank, right across the parking lot here. Here for all your lending needs. So if you have any questions on the lending side, let me know.
Were you guys playing pickleball in the parking lot last week?
We might have been.
Yeah.
It was Office Olympics.
Can I confirm or deny that?
And the
Just let me
mortgage,
know
the
next
mortgage
year.
team won. So lots of athletes on the mortgage side, yeah.
Just let us know next year. We'll come over and play.
Ooh,
Yeah, we'll
there you
battle.
go. Battle for the champion. I like it.
Alex.
Alex Costas, Community Mortgage Brokers, always a pleasure being here.
Thank you.
Yeah, Christy?
Yeah, Stacey Norris, Great American Title, all your title and escrow needs. And so now that we're back to doing open houses and all that, if you guys ever need anything, sponsorships or any help out with food or whatever, just let me know. So
Thanks, Chrissy. Casey Cooper.
Casey Cooper with Summit Lending. Good to see everybody.
There we go. Going around. Yes.
Chad Noble with New American Funding, Eric Edwards with New American Funding. We have a new program called NAV Cash that helps get rid of contingencies.
And you are in the Nix office, correct?
Yep.
Okay.
Well, Jess Bowman.
Jess Bowman, Bowman Insurance Group. Insurance is crazy right now, but we still have a lot of options to help your clients and to help you guys. So any insurance needs, give us a call.
Thank you. See anybody else? Okay.
Online?
I don't think we have anybody online.
Forever, actually.
Okay.
Okay, just remember, we can hear everybody in the back. We can hear it through the speakers.
Everything you all say goes through, so just remember. So every week we talk about our mission, vision, values, belief, and perspectives. And I pulled up mission this week because whenever you form an LLC, you have to say, what is your purpose for the LLC? This is our purpose. So instead of a purpose, this is what we believe in. We believe in
Build careers worth having, businesses worth owning, lives worth living, experiences worth giving, and legacies worth leaving.
what I love is nowhere on there does it say sell a lot of real estate. But we use that as our venue to do all these other things. So if you ever wonder, what's the goal of KW? This is it. This is our purpose. This is why we exist, to help you all live a bigger life through the sale of real estate.
And the cool thing about it is careers, businesses, like it's plural. There's more than one. And real estate is
That's
an
a great
avenue
point.
in order to create other business opportunities.
How many people in here have more than one business? Look at that. That's it. I've never looked at it that way. So we can have multiple things. You don't have to do just the one thing. You can do a lot of different stuff.
That's why the opportunity map is so cool within KW, because you see so many routes that you can take.
We should share that again sometime. The other cool thing on this, careers, businesses, that's work related. Lives, experiences, legacies is life related.
Made me laugh when I think of lives in plural, like your cat, 9 lives.
So we shall have cats. Okay, maybe not.
Tish would be for that, yes.
Yeah. All right, every week we also do a culture moment where we recognize someone who's done amazing stuff along with KW Culture. Last week's winner was Elise Ellis. Elise, did you want us to read it or did you want to come
You
and
can
do it?
read it.
I'm good, I'm comfortable back here.
That you're comfortable?
You want me to read it?
Go ahead.
Okay. I am so honored to present the Ron Steffes Award this week to an amazing human being. When I was thinking about who to pass this award on to, one person came to mind and stayed in the forefront all week. She is smart, hardworking, caring, and she has moxie. She is great to work with on transactions, keeping her clients' needs in the foreground. She has a very interesting personal story that I encourage each of you to sit down with her and listen to all of her life experiences. On top of all these things, she has a huge heart, a great roomie at Mega Camp, and is a diehard Chiefs fan. Cassie, you are an exceptional example of the Ron Steffes Award. Congratulations, Cassie Jones.
Yay. Phone number right
Yep,
there.
so her cell phone number is 417
You got your phone, you got to text her and say, congratulations, you're the culture winner.
425
92.
7192. Sorry.
My handwriting is so
my
bad.
writing is really bad. 417-425-7192.
All right, very cool. So she'll get to keep the traveling trophy for a week. I wonder if she'll take it to a Chiefs-gate.
I don't know if she's going. I don't know.
That's true.
I did ask her if she was gonna be here today. I tried to encouraged her to come.
Without saying much, huh?
Well, I'm just kidding.
Awesome. Okay, broker moment. Jim, what do we have?
Still good. I will tell you that, one of the local title companies has consolidated across the state and, released some of their members, which is kind of a reflection of the economy and real estate in the world, so. She probably knows about it, but I don't want to announce over the speakers.
Okay.
I had a client friend that works there and she lost her job on Friday along with one of the managers, a couple of the closers and so on, so.
So one thing we were talking about this morning in our huddle is there's a change going on right now. And the people who are not coming in and staying plugged in are struggling.
Yeah.
The people who are coming in, so if you look around, you realize, hey, there's an agent I haven't seen in a while, encourage them to get back into the family and come to things because the community here will help everybody get through this. And it is a definite change. I mean, you can see listings lasting longer. You can see buyers more hesitant, especially as the interest rates jump up and down. But the more you stay in connection with this community, we're gonna help everybody get through everything.
And that's why coming to trainings is so important, because now we're transitioning to a skill-based market. And so a lot of our agents haven't went through the training of what a skill-based market looks like. They've gotten to the industry and learn how to just like survive of what was going on and how to navigate it. So now getting back to the skills is so important because you're learning different language patterns or different ways to meet new people and add to your database. Because think how many times that you're in somebody else's database. It's really how do you stay in close contact with them whenever they're ready to transact as well.
I see someone coming in.
Yes, you got it.
And it's pissed me off for a whole day. She's got a sign on her desk and this is what it means. Anyway, okay.
Oh,
Welcome to team meeting.
I thought maybe she was presenting something.
Oh, I don't know.
So, if you weren't online, you ignore that whole thing that
Yep,
just happened.
that's definitely the least move.
That's right.
Definitely the least move.
Okay, stats for the week. 340, so this is what is crazy every week as I do this. Almost every week, either east or north will buck the trend of everybody else. This week, new listings went up everywhere except north, where they went down, 1 to 2. No, they went down, I think. I can't remember. It was yesterday when I did this. But it's weird because it's like the outer counties sometimes follow like a week after from what we've done. Oh, here it is, so you can tell. Last week they were 27, this week they were 34. Everybody else dropped. So north counties went up when everything else went down. Everywhere went up on closings. Look at north, they went from 9 to 23.
Wow.
East went from 18 to 27, GSBR 102 to 157, SOMO 159 to 228. And I realized somebody asked, what are the differences in these things? Most of us in this room are part of GSBR, Greater Springfield Board of Realtors. GSBOR, Ozark Trail Board, Tri-Lakes, 4 or 5 others are all part of a conglomerate called SOMO. So it's a one giant MLS. So when you see these numbers, this is more specific to almost always it's Green Christian in Webster County. That's,
the Tri-County area.
yeah, that's our main area. But then SOMO is everywhere that our MLS is. So that's why there's a difference in the numbers. But again, we have agents in West Plains and Rolla and Stockton and all over. So that's why we do both, because we're covering everywhere.
Yeah, and we like to break it out in east and north, so those agents in those areas can see that data to specifically have conversations with their clients too.
Exactly. And so let's compare it to last year. Look at how close we are now. On SOMO, there were 342 new listings this week. Last year, this week, there were 344. 2 units difference. On GSBOR, 208 listings this week compared to 212. We're almost running the exact same as last year. It's just very interesting to see how it's all balancing and becoming the new normal. Here's the next interesting one. We're up to 1,485 active listings Monday. So every Monday morning I run this just for GSBOR. This is not SOMO. This is specific to our local board. So the blues, I went back to the last time we saw bigger, or I'll say this right in a second. The next numbers we need to be looking at. Before COVID, 1745, 1743, and 1743 were the lowest we'd been in a long time. I'm gonna start tracking that to see how soon we get up to that number again. And again, if you look back though, 5-6 years, we were still running over 2,000 listings every week. So you had plenty for your buyers to choose from.
What a roller coaster we've been on in 2023. January of the beginning of the year, we were at 1,250 listings. In April, we hit 974, the lowest we have seen. And then now we're back up to 1,485. So if y'all have felt like the market's been weird this year, it
You're
has
right.
been. Yep. It's been very strange.
But you've got to be the person talking to your clients and being the person with the knowledge.
Yeah.
And a lot of people are just guessing. And again, that's why we encourage you to show up and learn these things so you know what's going on with the market so you can take care of your people.
And the
What do you
big,
say to them?
well, that's what I was gonna say. The
Market's
biggest piece of
weird.
advice is to have something thought out based on market stats to tell your clients. When people come to you and say, how's the market? And your response is it's crazy. How do you think they're gonna take and perceive that? Or it's been wild, or, oh, we haven't stopped, or whatever you may say. Make sure it's something that articulates what's happening in the market, so that way you can better convey. And if they ask you, a great question to ask back is, why do you ask? Like, what are you interested to know about the market? To see, maybe are they a potential buyer or seller that's on the verge? Or maybe they're just hearing something on the news and they want to validate it through a real estate agent. And so that's how you can become an expert of choice.
So backing up to this screen for a second, in the North counties, there were 23 closings this last, wait a minute, make sure I'm right, 34 listings. Of those, 7 went under contract. Okay, so in other words, of the brand new ones, only 7. So if you're still telling people, yeah, we can sell your house in a week, you're setting yourself up for some interesting conversations. East, they had 36 new listings, 6 went under contract of those. GSBOR 208, 47 went under contract. So if you will price it right, it will sell. But it's a whole different world from a year ago. 342, there were 77 that went under contract in 1 week or less. So have the conversation, set the expectation from the beginning. Yes, we can try a high price if you want, but we're gonna go ahead and sign the price reduction right now. We're gonna do it in 2 weeks if it doesn't sell. Also, we talked about Flex and List Hub will let you send digital reports to your sellers. So they can see, the one way I look at it if you go into Flex, and we can talk through how to do that, it will send a report every week. It'll say, this many people looked at your house in Flex, this many people looked at it online, and then you say, so there are 300 people looked at your house, only 2 came to look at it in person. That tells us the market thinks your price too high. I'm never the one saying it, the market's telling them what it is. So just use the tools we've got. And speaking of tools, Command now has some links to ChatGPT in it. I don't know what it was, but I saw it as I was doing the reports yesterday, so that's kind of interesting too. Okay, on. Realtor stuff from GSBOR. There's a couple classes coming up. You get these every Sunday, so we don't spend a lot of time on these, but there's an at-home with diversity class. There's a CRS with Rich Sands. All these are accreditations you can get if you choose. Fall appraiser panel, which is tomorrow. Christmas party, November 30th, and then our holiday party is December 2nd. So GSBOR party, the Thursday after Thanksgiving. Ours, the Saturday. So it's a week of partying right there.
And Mike gets installed as GSBR president.
That's right. Oh, gee. So we're gonna have a lot of fun. It's gonna be a quick installation with a nice dinner and a big band and then a party afterwards. It's in the White River Conference Center, what's that place? Bass Pro.
What's that
Some of
place?
you've heard of that place before. So it's gonna be a lot of fun that night. And then ours is always a lot of fun. So it'll be coming. All right, rest of the calendar for this month. Today's team meeting, tomorrow getting started as an agent, seller's contracts with Don. Highway 60 people, I'll be coming to see you on Wednesday. Admin mastermind. Talk about that a
Yeah,
little bit.
Jen Wolf just came back from operations with Monica Reynolds in Austin. And she came back with a whole playbook. And when she was describing what we were planning on doing on Thursday, in her description, she said the word amazing twice. And she said, if that describes my experience, then that should just tell you a little bit in it. So if you have an admin in your world, or you're thinking about hiring, as a Rainmaker, you're more than welcome to come join us. We love when we have Rainmakers that come and join us. We're gonna start breaking down each of the plays in the playbook. So we have an agent playbook that tells you how to do an open house, how to work your sphere of influence. Now we have an admin playbook, and we're gonna be working through each of those. So that will be Thursday at 9 a.m. And we'll start breaking down each playbook at a time.
Is it live or Zoomed or?
We always are live. We may have some Zoom options. It just kind of depends.
Okay, got it.
Because sometimes we rotate locations.
And then more importantly that night, so we have 3 events going Thursday. Tell us about them. What
Okay,
do we want Nicole to?
yes. So we have the trunk or treat on Thursday and our chili cook-off. So for all of our agents, it's now time to get your chilies refined and submitted. All the money you will use to vote, dollars or whatever, that's how we'll vote on your favorite chili. All that money raised will go to Springfield Cares, which is our local agent fund to help our agents here locally. And then we have a costume contest as well.
Yep, and usually the teams have some kind of theme going on and it's a lot of fun. So make sure you coming in Thursday. What times are we? 5 to 7. It's right there on the screen where I can see it. Invite your mommy. Oh, sorry.
You just had to point that out. Yeah,
I know.
thank you, Andy. Thank you with the little and on these.
Come on and have some
Thanks.
chili and gobbling it all up.
Yeah, and this is definitely a kid-friendly event, so please bring your kids. We'd love to have them here.
Very cool. All right, then this weekend, it starts the Greater Harlan Summit. It is like mega camp for our region. It is in Branson. There's what do you call it? Well, here we go. Welcome party on Sunday. Monday is the main day. That's where the majority of the large events are. You'll see Jordan Freed as the keynote speaker that day. Julia Lachey Israel, who's an incredible speaker that day. I'm interested in the KW Mom Bosses, where mompreneurs thrive. Mom entrepreneurs, people who are killing it as a mom, not necessarily killing it, and killing it in the business world.
Which Elise Riley is about to be put on that panel.
Is she really?
Yeah.
And we have Paulina's on a panel.
Dan and
I think
Carrie.
Dan is, Carrie is. Actually, here it is again. So you can see all the people I've added. This next week. It's here now. You can use the QR code to sign up. I'm assuming, yep, Nicole's already got the link in the chat there. Even if you can't make it to the Sunday night, or even if you can't make the Tuesday, which is just the morning, the Monday be worth it.
Mhm.
So make sure you get to this. It's gonna open up. If you've never seen the bigger KW picture, this will get you a big glimpse of what's going on with it.
Yeah, I can't recommend going to regional events like this enough. That's one of the big benefits about KW is that we have local, but we also have a regional and national presence. So by going to one of these events, one, you get to hear from phenomenal speakers in our region of what they're doing in their jobs to take back. But also you have the other referral and networking option of it too. How many people have referrals that they send to Joplin even, or to Kansas City? You're able to network with all of these agents and really just learn what they're doing. And even if you can just take one thing away to implement into your business, that's where it's worth it.
What's interesting, 2 of these panelists on here, I've sent referrals to. So just by meeting them at events, it's paid for my ticket, and the tickets are only $249. So think of all the different ways you can use this to your advantage, but it's gonna be incredible. And I'm excited so many of our people get to speak too.
Yep.
All right, then mark your calendars for February 25th through 29th. We're gonna be there for leap year.
Oh,
That just dawned on me.
okay.
Okay, they announced the main keynote speaker, so here we go. you know a little bit about Mel Robbins, correct?
Yeah, so Mel Robbins has one of the top podcasts on Apple or Spotify or whatever podcast you listen to. When they announced it, we were in the office and I started screaming because I was so excited. If you haven't heard of Mel Robbins, I would strongly encourage you to look into her podcast. To me, she's like a version of maybe like a female version of like an Ed Milet. So if y'all loved Ed Milet, I would definitely look into Mel Robbins. Super excited that she's going to be there at Family Reunion, true powerhouse.
So here's what I've learned. I didn't know who Ed Milet was. I'm like, oh, some guy gonna talk.
Mhm.
Once I heard him, I'm like, holy crap, why did I not learn more about it?
Yeah.
So yesterday, I followed Mel on Instagram and all the different things. Start learning about these people ahead of time, and that will make the experience even better. But this morning, she had 3 or 4 motivational things that were really cool
Yeah.
already on the gram, so.
Already
look
on
at-
the gram.
on the
He's
gram.
so hip.
I
Wow.
am. I haven't found her on the Tickety Talk yet, but I'm gonna find her.
Okay, here we go.
But she will be one of my top 5 on
Yeah.
MySpace, so we got that going too. Some of you don't even know about the top 5 on MySpace. And you can pick your favorite song. It was great. So.
Or
all
not
right.
great, depending on what song.
Or
you
not
choose.
great. All right, we're not gonna watch that again. So every week we try to have some kind of theme to help you. And this week is one of my favorite things,
Tax strategies.
taxes. Yes. So we got two guests that come in with us. Let me read a little bit about them. Stephen Chavez is a dedicated family man and a financial planner with a strong educational background. You know what? Let's get to the screen that shows them. Oh, also disclaimer, anytime we bring in any professional, we say consult the person you employed to help you. All these are great suggestions, but every person's situation is very specific. So make sure that you are checking with whoever you use. So in other words, that's our disclaimer.
Yep.
Don't just take anything we say up here and run with it, especially when I say things related to brokerage, because no, that's not good. So, all right, so Stephen holds a degree in accounting and has earned his MBA, showcasing his commitment to excellence in the financial field. With 8 years of expertise in tax expertise, he's become a trusted advisor to many. He serves as one of the partners of Affordable Financial Services, where he provides clients with expert financial guidance. In addition, businesses, he's an active real estate professional and investor, managing an impressive portfolio of 91 doors. Then we also have Adam Piepenhagen. I said it right?
Woohoo!
Okay. Oh, we gotta get the slides figured out on this too.
Okay.
We're working on that also. I'll read slow. Adam is a devoted husband and loving father. What do you need?
No, I can't work this mouse.
Okay.
Anyway, go ahead.
He's a seasoned financial professional with a strong foundation in accounting, holding both an accounting degree and a CPA designation. He's dedicated 7 years to the tax industry, amassing a wealth of knowledge and expertise. He gained invaluable experience working for one of the largest accounting firms in the US, where he sharpened his skills and developed a deep understanding of real estate taxes. As a partner at AFS, he continues to provide clients with exceptional financial guidance. He's also a drummer. So I saw that on here, which I like. I'm a bass player. We can get together and jam later on. And he and Stephen both are golfers, so we have all that going for them. So let's give you a round of applause. They come up.
Yeah, I was gonna say, he's pretty damn good.
I'll just go golfing anymore though.
So what, while they come up and get the PowerPoint pulled up, the important things about tax strategies in real estate, you have a lot of opportunities in your taxes. So as a 1099 independent contractor, you can write off certain things that apply to your business. The thing about bringing in tax strategists, there may be other strategies you can use that you maybe didn't know about. One of the things that I learned through KW Wealth with Brett Tanner was the Augusta rule. How many of you know that you can use your personal residence for events and write that
I
off
love that one.
for the Augusta rule? So there's different ways. If you have any rental properties, you can use cost segregation on those and get some money back and reduce your tax implication. So things like that, we want to bring these resources to come in to help open your eyes to the possibilities. So,
We're getting there.
okay, cool.
Progressive lenses. I can't find the screen.
Well, while we're waiting on him, quick question for everybody. Who's ever been audited in here? Anybody ever been audited?
That thing's not fun.
Not surprised, I'm just joking. No, so, that's a popular question I always try to ask because people who haven't been audited don't understand like essentially what an audit is or what they're looking for. And so knowing that we have at least one person in here, I'll probably be asking you some questions on like maybe some things that they'd asked from you, but yeah, we're gonna cover some stuff about audits and just different things like that, because I mean, I hate to say it, but at least 1 or 2 people in this room will probably be audited in the next couple of years with the uptick in IRS agents and things like that, and like the focus that they're gonna have on self-employment. So, just, not just from us, but, talk with your tax professional, about these things, like, hey, what happens if I get audited? Like, if you're not trying to, if you don't want to pay taxes, but you're also like, what if I get audited? Like, some tax professionals, they're not gonna look out for your best interest. They'll be like, oh, I see there's $100,000 for meals, which probably shouldn't be a deduction if you are, you shouldn't be spending $100,000 on meals unless it's a full corporation doing, at least $1 million or $100 million, yeah. So, just talk with your tax professional. I know they mentioned it once, but
Richard, can you get to share screen?
we'll be up here. We're gonna talk to you about things that we found in our firm, what we've been able to help, our clients with, and hopefully that can relate over to helping you guys with some stuff too.
Put this in the middle and we'll use this just as a guideline.
We're getting there.
Yeah.
Get my stuff out of your way. Aha, so, yay.
And then
Another quick question
So you can see what's going out.
for everybody.
And they can see it here.
Who all has S corps in here? Who does S corps? Okay.
Awesome. So yeah, just overview, like you said, top tax strategies, 2023 for real estate agents. This kind of goes for anyone self-employed, just because and also just to know our audience a little bit better. I guess raise your hand if you're a real estate agent. Okay, and then also raise your hand if you have any other investments, properties, whether rentals or, okay, cool. Any fix and flippers out there? Buy and resell, okay.
That's why you got audited.
So we just wanted to understand a little bit, just to know who we're talking to, because some of these things may only apply to real estate agents who's getting 1099s, others apply to who has rental income, who does fix and flips, because there's different tax strategies out there for everyone. And like you said, already disclaimer, we're gonna have it at the end, but don't take this as advice, it's particular to your situation. So kind of, it's not good.
I have to use arrow.
Use the arrow. On the computer.
Interesting. Okay,
Now,
yeah, just use the arrows. It seems to be cooperating better.
awesome.
So kind of what we're gonna go over today, a lot of people, when realtors come to my office, the first thing I hear is, I wanna deduct this, I wanna deduct this, I wanna deduct this, right? They have everything already lined out on what they wanna deduct. They wanna deduct, their vacation to Maui, they wanna deduct their, brand new Lamborghini, all these different great deductions, right? But they don't necessarily understand their tax obligation. So we're gonna cover that. I think that's one of the most important things that we will cover today, is because when you walk in to talk with your tax preparer, tax advisor, whoever it is, if you have no idea what you're walking into or what you made, what your expenses are, do you think your tax preparer is gonna know? Probably not. So understanding your situation, what your tax obligation is going to be at the end of the year, so that the professionals around you can, advise you based off of your specific situation.
Yeah, we'll go over the top tax strategies. That's kind of the meat and bones of our presentation here. We'll hit compliance and record keeping, talk to you a little bit about our case studies, what we've experienced in real life, and then take any Q&A at the end. And so like he just talked about, understanding your tax obligations. So first of all, you want to understand, okay, when I file my taxes, what am I going to get hit with? There's, what am I filing as? Am I filing as a Schedule C, as a sole proprietor? Do I have an LLC? Maybe I've elected to be an S corp, or maybe I have a partnership. that I'm doing fix and flips with, and how is that? Like, am I gonna have to file a separate tax return? So a lot of these things, you wanna understand, okay, what am I gonna be filing? Do I have a partner involved? Is it just gonna be me? How am I gonna get hit with self-employment tax? And so a lot of times you wanna understand your filing status, because there's different, sole prop LLC, if you create an LLC, you're gonna elect to be an S corp maybe. So there's different filing statuses, and that's gonna be subject to different taxes. So if you're a sole proprietor, you're gonna get hit with self-employment tax. So a lot of people think I'm gonna file my taxes and, I'm gonna pay income tax. Well, yeah, income tax is one of those, but you're also gonna get hit with self-employment tax. And so it's like, how can I minimize the self-employment tax or keep track of deductions to try to limit my tax liability a little bit?
And a big thing too on determining your filing status, so who all in here has LLCs? The most everybody, okay, so when you set up that LLC, is for you guys, is that when you guys are kind of making the decision to file as, a S corp, a Schedule C, like, is that whether you do it yourself or with like an attorney or whoever, are you guys deciding that then? Or are you waiting until you do your taxes to decide that? Right? So I think it's important when you're setting up your LLC, if you are going that route, if you're gonna run it underneath, whatever it is, Real Estate 101 LLC, you really should be deciding that right then and there, because it does have ramifications on how you register yourself on the state level, which talk to your attorney, because if you register as a corporation, they may recommend you register as an LLC or vice versa. So you should really be making those decisions when you're registering that LLC, because if you're waiting till tax time and come to find out like, oh, I don't want to be a corporation. Well, you're registered as a corporation and that's how you're gonna be taxed. Like, it's hard to go back and change those. You can do amendments and things like that, but if you go to your tax preparer and say, hey, I want to do an amendment, and they're in the heat of tax season, they're probably gonna tell you to kick rocks. So just have those conversations up front. It's good to ask those questions because it'll save you potentially thousands of dollars down the line or hours of trying to go through and change something at the heat of the moment.
Also, when they hit on one little misconception, maybe it's just rumors going around there, but a couple things. People think, okay, I create an LLC, that means I get to write everything off, right? Well, no, you're still relying on IRS regulation to say, is it really business purpose or is it personal? Any personal expenses cannot be a business deduction. It has to be a business purpose deduction. Is it reasonable and necessary for you to do your job to write that off? Another misconception is they think, okay, I created an LLC, that means I'm filing separate business taxes. Well, not necessarily. If you're 100% owner of your LLC, you're gonna file the same way as if you didn't have an LLC. It's gonna be on Schedule C. So some people come in and they say, okay, I created my LLC, I'm gonna file separate business taxes. I'm like, well, you heard that from someone, but that's not really how it works. You're gonna be filing still the same way. So those are kind of a couple misconceptions that,
Is there an easy definition for reasonable and necessary?
as far as, so it's not black and white. If you can make a case to say this is business use, if you can convince an IRS agent that this is business use, then I say, if you're comfortable with it, I'm comfortable with it. So a lot of it is it ordinary and necessary? And that's really in the IRS regulations, they say a business expense is ordinary and necessary and reasonable, basically. So it's like, if it can meet those tests, like, okay, this is an ordinary expense, other people incur the same expenses. It's necessary for you to do your job or sell more houses or, part of your business activity, then yes, you get to deduct that.
And kind of what I mentioned earlier about the meals. So if you do $100,000 in sales, like your 1099 shows $100,000 and you have $100,000 of meals, you're gonna get audited.
Yes.
Like, just plain and simple, like, so reasonable and just
Because
kinda
they have a lot of data.
Yeah, logical, like, I mean, look at percentages, like, are you really spending 20% of your total revenues? If you are, go talk to a financial advisor, find out why you're spending 20% of your income on meals. Like that, and that's what the IRS is gonna look at. They're gonna look at percentages. They're gonna see, hey, like, is $100,000 of meals on $100,000 1099 reasonable? No, maybe on $100 million 1099, right? Because it's at that point, it's less than that 1%. So when you're going through adding up your totals and everything on a piece of paper or however you do it, if you come up with $40,000 of meals, you can take that to your tax preparer, and if he's willing to do that, okay, but you need to take a step back and say, okay, well, I only had a $60,000 1099. So it's kind of logic, like logical thinking will keep you out of trouble,
Yeah, and at the end of the day, it's business meals, so like, okay,
Yeah.
you're having meetings with clients, you're having meetings with team members, you're meeting with an advisor, something like that, so some kind of business purpose, and the IRS would request records of, hey, you know, keep your receipts right on there, what that was for, that's proper record keeping there.
You wanna cover the S corp issue?
Yeah, we can mention it. So S corp's a good way, you know, you have an LLC, great. To be an S corp, who's heard of S corp or wanted, or even is an S corp? So LLC transitioning into S corp. LLC, you're filing as a sole proprietor, getting hit with self-employment tax, filing on your personal tax return. To get rid of self-employment tax, advisors may advise to, let's file an S corp. So there's an election to be made and it has to be made on time, or there's a late election, so there's some nitty gritty there. And there's just some additional things that need to be done being an S corp. You gotta be paid a reasonable wage. You gotta have payroll set up, and then you have to have good record keeping. You gotta have, you know, balance sheet, because we may be required to file a balance sheet with assets and liabilities and what's your equity in the business. So there's things that come along with the S corp, but it can be beneficial to some people. Although where the IRS has an issue is the reasonable compensation. So for a realtor.
And it's not just the IRS, it's also tax cases that have also been decided
Yeah.
and has went against.
Yeah, because these are going back on case law, so like which it would be a high chance for you to get audited. Let's say a realtor has a 1099. This is all they do, sell houses. So based on their work that they put in, they're getting paid commissions. And so if you want to be an S corp just as a realtor, your reasonable compensation would really be your total income. So it's like, if you're wanting to include that total income, let's just say $300,000, getting paid 1099, but you only want to pay your reasonable salary of $50,000. Well, the IRS is going to come back and say you were paid on commissions based on your work, your time you put in, all your expertise. You made 300,000. 300,000 should be your reasonable compensation. So really, the S corp isn't going to do you any good, because you're gonna have to record that as your reasonable compensation. So yeah, you can flow through an S corp, but you're gonna take that out on payroll. And at the end of the day, you're paying payroll tax, which is the same thing as self-employment tax. And that's kind of the misconception, is people wanna, you know, maybe an advisor say, yeah, let's be an S corp. And let's pay you a little bit instead of the full amount that you've actually earned, because the IRS is gonna come back. And I mean, yeah, it may go through, but on the off chance that you get audited, they come back. So we always want to be on the IRS, like, hey, we want to do what the IRS is going to do, because if they come back and hit you, you know, we don't want that to happen.
The same thing on an LLC?
So LLC, if you create an LLC and you haven't elected to be an S corp, there's no reason to put yourself on a reasonable wage, because you're going to file on a Schedule C and you're paying self-employment tax on Schedule C. So no reason to have payroll tax. That's only requirements for S corp there.
Unless you want to pay,
You
yeah,
could just pay yourself a reasonable wage.
You could,
And the
yeah.
rest of it be business.
You're just moving money from one bucket to another bucket, paying that payroll tax throughout the year instead of at the end of the year. Yep.
and it kind of helps you save money too, because a lot of people are, payroll companies, like, we offer payroll services for different companies, small businesses in the area. And a lot of people will tell you, oh yeah, go ahead and do it, right? And you're gonna end up paying them $100-200 a month to process your payroll. Sure, you're getting a solid wage, but you're also spending an extra $100 to $200 a month and not really getting any benefit. You're just spending extra money, which could be going in your pocket. Like they said, the real estate market is crazy. The more money you can keep in your pocket, the better. So it's not just about necessarily tax savings when you're doing your taxes, but it's also savings that you can incur and build up throughout the year by knowing these things. So you're not going and spending $2,000 on a payroll service that is not giving you any benefit.
So what do you think is the tipping point to go from an LLC to an S corp? Is it once you've hired an admin that's a W-2 and that's when you should tip to it, or?
So anytime that you have a business operation that's greater than yourself is kind of what I would say. And that's so why I asked some of you who have fix and flips or other rental activities, you know, if you have other sources of income where you're, you know, yeah, you're getting commissions from being a realtor, but also you have fix and flips and you want all that activity to be in one, and you have contractors that you're paying out. So you're making money outside of yourself. Okay, now you can be paid a reasonable wage, because your reasonable wage, you know, the money you make is maybe more than what your reasonable wage could be. So that's where you could save some. So yeah, on a normal, someone who creates a business, a service business, sometimes I would even say above 40,000 of net income, I'm gonna try to switch them. But in a situation with a realtor, it's a little bit trickier, because it's like, okay, your reasonable wage would be that. So
Just wanted to touch off, don't put rentals in an S corp. I know you mentioned rentals real quick. Rentals and S corps are like, I mean,
you cancel each other out.
yeah.
No, you need to. I didn't think we'd spend that much time on this slide, so we probably hit on some points on all this.
So these are just, we want to go over some common deductible expenses for real estate agents. You probably have all seen these, you probably have all used them. And these are not the only ones. There's more out there, but you know, a lot of them, you have your home office deduction, you have your travel expenses, marketing and advertising costs, professional fees, you can read the list. The big thing with these are, again, it goes back to the reasonable and necessary, right? So if you go build a $500,000 house and you want to use it as your office, and you're like, I'm gonna use a, 4,000 square foot as my office. Again, reasonable and necessary, probably gonna get on.
So you only live in 100 square foot,
Yeah.
and then all the rest is.
And then another popular one, so like education and training expenses, I get this question all the time. So, I've met realtors who have, come from different industries, things like that. And a popular question I get is like, oh, can I write off my student interest? No, that goes on another schedule, but it's not a business expense. Like that's incurred personally. And then you just happen to, go on and, be a realtor. So, there is a spot for that. So just to clarify that, that's a very popular question I get across the board whenever I have realtors come in.
Yeah.
Another one I wanted to cover is this self-employed health insurance. Who all has self-employed health insurance in here? Gotcha. Do you guys have it through Marketplace, through just a third-party plan? Third party. So there is a line on the tax return where you can actually go take that self-employed health insurance and take it right off the top. So it's one of the expenses I see missed the most, is because a lot of people are like, oh, it's just my health insurance. And some people even try to put it on your Schedule A, which is your standard deduction or itemized. I'm sure you guys have heard that. Some people try to put it on your Schedule A. It doesn't go there. There's actually a specific spot to where it'll pull off if you have a $100,000 1099, and let's say you have $60,000 in deductions. Well, there's a $40,000 net profit. It'll, if you spent $12,000 in that year, it'll take $12,000 right off that profit. So just be looking out for that, because that is a very popular deduction that gets missed across realtors, or really anybody in real estate or self-employed.
What's the depreciation that you've got in there? What's that on?
We'll hit on that a little bit more on another slide, if you.
Put it under.
Well, I will say, so depreciation is any assets that you purchase. So normally I say, okay, above $500, what is any kind of asset that's gonna last more than a year? If it's a supply or something that's gonna be used up in less than a year, we're just expensing that right away. Depreciation is any assets, an investment in the company, equipment, furniture, vehicles, we'll touch on vehicles. But depreciation, it's an asset, and then you're gonna depreciate it. So it's not an expense you use right away.
On the out of town business trips, what could be considered reasonable? Say you go to like Oklahoma City, Bricktown for the weekend, what could be considered to turn that or part of that into a business trip?
Are you going for business?
Yes.
Add business elements in there.
Yeah, I mean, what would be
That's what
considered,
the
like,
IRS is
it's like
gonna
I go down there to say like, hey, I'm gonna research the market, going to the Keller Williams office there, check it, like what could be, or it wouldn't seem so janky.
So you mentioned go to Keller Williams office. What would be your expenses in going to the KW office down there?
Gas there and back,
Okay.
the hotel.
So what would your percentage of that trip be for, like, what percentage would be for business?
100%.
Okay, so if it's 100%.
While I'm there, I might visit some things though.
So again, what Adam mentioned earlier, it's like reasonable and necessary. If you are going there for business, keep track of it. Like, we're gonna go over some record keeping and all that stuff, but if it's not for business, it shouldn't go on your tax return. And, you know, a tax preparer saying that, obviously, it's like, well, you guys want your tax preparer to write everything off, which I would love to write everything off for everybody. But the issue comes back to is reasonable and necessary, and if you get caught doing things you shouldn't be doing,
You're gonna get hit with interest and penalties and
Yeah,
it's gonna.
on
make it a
top
lot
of the
worse.
tax bill that you did. So if it's
I
100,
Well, I was told like too, like if you go like out of town, to always stop at a Keller Williams office, get a card from there, prove you were there to say you went to there and like you can
Met
write
with
off
so-and-so.
some of it. I don't know.
And here's another thing that tax advisors should know is you can plan your trips around a weekend. And this can help because let's say you go on travel days are always business days, if you're going for a business purpose. So let's say you travel down on a Thursday, that's a business day. Friday, you have a business meeting, that's a business day. The weekend hits, weekends don't count. So Saturday and Sunday, you can have personal days and they won't go into your calculation of percentage. Monday, you travel back, that's a business day. So from one day of a meeting, you can have 100% business use planned on around a weekend. So also that's kind of a little trick, maybe something to put in your pocket, but make sure there is something business related and that you can prove that. Maybe you're, there's probably no reason why any of you would list a house far away, but I mean, if you had a listing far away or something, you know, you're going to meet, or you're going to a conference or a training in Las Vegas or whatever, you know, you're writing off all that. So
that's what I would say, like, they just showed the Las Vegas thing. So if you're gonna go,
yeah,
I mean, I'm sure there's gonna be classes. I saw there's gonna be speakers, stuff like that. That could be considered a business trip, right? Again, reasonable and necessary. If you go to the casino and pull out 10 grand and lose it on the floor or whatever, and you bring me that receipt and I see $10,000 and $10,003.50, I'm gonna know what that is, right? So gambling, again, so, you know, I've got that. Trust me, people try to bring in the craziest receipts. Look, I spent 10,000 in Vegas. Here's my receipt. That's an ATM receipt, man. Like, come on. So just like, if you're gonna do certain things like gambling, like, again, you know, alcohol is a touchy subject whenever it comes to what you can write off and what you can't, because a lot of people are like, well, you know, I was meeting with the client and we had drinks, and, you know, that doesn't always necessarily relate to a business deduction, right? So, I mean, tax repairs can go back and forth on different subjects. What we've seen is that more times than not in audit, if you have to provide a receipt for, let's say, a $2,000 dinner, and they see that your steak was $50 and that your liquor was, you know, $19.50, you're not gonna be able to get that deduction, right? So reasonable and necessary is, you know, one of the biggest things you guys, you know, when you're doing your taxes, when you're adding up your deductions, just think reasonable and necessary. I know a lot of people don't wanna pay taxes, but I promise you, you don't wanna get audited, you don't wanna get paid, you don't want to pay those same taxes with another 20% of interest and penalties tacked on, because it does accumulate very quickly.
yeah.
And we have about 10 minutes left, so let's let them get through their entire presentation, then we'll ask questions and then they can stay around and answer one-off
We'll try to
questions
get
too.
through these pretty quick here. Okay, so we're gonna go through just quick 5 tax strategies. Auto expenses, kind of back to the depreciation thing. But first I'll touch on the standard mileage deduction. You guys probably know, track your mileage for business vehicles. This year, 2023, 65.5 cents per mile. So this is when the IRS would require, hey, you should keep a mileage log. Each vehicle, maybe you drive your vehicle or sometimes your wife's vehicle and it alternates. Keep track per vehicle because we can take mileage per vehicle. Let's say you have one vehicle that's 100%, you drive it, all of the mileage is business. Okay, well, and even if it's not 100%, maybe it's 80%, it has to be above 50% is basically what I would say to take depreciation. Let's say 100% vehicle over 6,000 pounds, we can take special depreciation. And this is gonna be what we call bonus depreciation. 2022 was the last year of 100%. It's scheduled to phase out by 2027, it'll be 0. I am hoping Congress will pass something in the meantime to extend this back to 100%, because I know that this helps the economy. I mean, stimulate people buying things. That's one of the main reasons businesses buy things. And so hey, we need a deduction to write off. So 2023, it's limited to 80%. So you buy a really expensive truck, $100,000. Okay, we can take, it's over 6,000 pounds. We can take $80,000 right away in the first year to drop that down if it's 100% business use. So it's a very good deduction, because let's say you don't have to put any money down on a vehicle. You buy it in December, no money out of your pocket, and you get it's $100,000 truck, $80,000 deduction.
And that 80% too will actually be a little higher because you have your first year depreciation and then 80% of the bonus on top too. So it could be around 90 to 92%.
Yeah. Like I said, IRS requires mileage logs to document the business use of each vehicle. So, if you come in and say, yeah, this is 90% business use, ideally you would have a mileage log to show, out of 10,000 miles, 90 or 9,000 of those miles are business.
Mileage logs can be written too. They can be handwritten.
Next.
So real estate professional, we want to touch on this one because this is another very popular question we get, who all in here owns rentals? Okay, so, you guys, have that, benefit of, an extra deduction essentially. Real estate professional, pretty much what you're doing is you are classifying yourself as a real estate professional, which takes away the passive loss limitations. So if you show up, 1099 of $100,000 and you have any deductions, but you have $100,000 loss on your rental, those can offset and you're good. If you don't have that real estate professional exemption, then the loss limitation starts to be zeroed out, and you potentially don't have any sort of.
Just real quick, I mean, on the rentals, let's say it's vacant for multiple months, let's say 3.
So it was actively rented, now it's vacant. Is it on the market? Still trying to find. So as long as it's available to be rented, you're deducting those costs.
What if it's occupied and you're not getting your rent?
Occupied, you're still deducting, your general repairs and maintenance. You're just not collecting income, so you're not including income on your taxes. That's a separate legal matter that you'd have to collect on. So you just wouldn't have to include that.
So this is one of the coolest ways for real estate agents to be able to limit their tax liability at the end of the year. If you're going into your tax planning meeting with your tax advisor, your tax preparer, whoever, and they tell you, hey, you're gonna owe about 50 grand on taxes, would you rather give 50 grand to the IRS or give maybe, 30 grand to the IRS and then be able to invest the other $20,000 to, your future, to an asset that's going to appreciate? You guys know the real estate market, like over the lifetime of real estate, it's always went up. So again, there's some really cool exemptions and opportunities in this for you guys to utilize to save big money throughout the year and year over year.
And this gets into a little more complex subject, so just want to throw it out there, and if you have further questions, you can either email us or talk to us afterwards. Right, 5 tax strategies to consider. The third one, retirement funds. So there's always deferring taxes by kicking the can down the road and socking money away into a retirement account. So you're putting money back to a solo 401k, a SEP IRA, simple IRA. You're just putting money aside and you're gonna get a deduction for that. And then it's gonna be taxable later when you pull it out. So that's just another little strategy to say, hey, there's separate thresholds, I should say, like the 401k, $22,000, SEP IRA, limited 25% of your compensation, but up to $66,000. So you can sock a lot of money away. If it's like, hey, I don't need this money right now, I don't want to pay taxes on it. Okay, you might as well put it away and then save it for later.
File and pay on time. Who files their taxes and pays their taxes on time in here?
I would hope all of you would raise your hand.
Yeah, so I would say probably 20% of most firms' clients do not, I'd say probably 25 to 30 maybe, do not file their taxes on time or pay their taxes on time, which relate to getting charged penalties and interest. if you wanna minimize, if you wanna save as much tax liability as possible, file your taxes on time. Pay your taxes on time, because a lot of people think, oh, I have an extension, you know, that I'm good till, you know, October. No, April 15th hits, if your taxes aren't paid, you start accumulating interest and penalties on what you owe. And a lot of you guys probably don't, I mean, I won't say a lot of you guys. I see a lot of realtors who don't even know what their income is until August of the next year. So don't be that person. Get your stuff organized, get in early, get your stuff taken care of, so you have a month or so to plan for that. It'll save you a lot of money in the long run.
Yeah, and you guys can read this, but 4.5% is a failure to file penalty. There's a failure to file, failure to pay penalty. Failure to file is the biggest one, so at least file the extension, file your return. If you can't pay, get a payment plan or something. The failure to pay penalty is much smaller than the failure to file, so file. And then also understand where your taxes are due to avoid penalties and interest. So like if your tax liability at the end of the year is gonna be more than $1,000, and you haven't paid any estimated income taxes, paying those estimated income taxes quarterly, because the IRS is gonna add additional penalty for not paying. It's a small penalty, but that's their small way of saying, you know, pay us quarterly throughout the year when it's due rather than at the end of the year. So let's say you owed $5,000, there may be $200 for not paying quarterly estimates. So it's not huge, but you can pay quarterly estimates. That helps limit the big bill at the end of the year.
And then the last strategy is like having good advisors around you, whether it's your tax preparer, tax advisor, a good tax attorney. I know, what was his name? He came and spoke the other night.
Cam Johnson.
Yeah, Cam.
Or Cam Jones.
Cameron Jones. You know, he does a great job of, you know, advising his clients on tax issues and how they set up their LLC and how they go about that. So if you don't have a good tax attorney or, you know, a real estate attorney you're working with and you know, are looking for somebody, you know, I guarantee somebody in this room is gonna have a recommendation, but find one, because everybody thinks attorneys cost a lot, but not having an attorney on your side when you need it costs even more. And then a financial advisor when it comes to, you know, needing to put stuff into, you know, a 401k, Roth, SEP, something like that, and you guys don't know how to do that, your financial advisor will be able to help you on that and make the process a lot smoother. And I know we're getting close on that time, so we'll just like flow through these. Record keeping, guys, like I see a lot of realtors just wait till the end of the year or even halfway through the next. They don't have the receipts, they don't know their income, they don't know their expenses. All you're doing is you're literally shooting yourself in the foot. Like if you don't know what your income is and you get a $2,000 or a $200,000 1099 and you only have $20,000 of expenses, like that's not gonna be good for you whenever it comes to tax time. So, you know, keeping track of your expenses, proof of income, doesn't only just help on the audits, but also helps on deferring that tax and or just saving. I can't stress enough, like, and honestly, I see it most in realtors. Realtors, I think out of everybody in our firm, do the worst job at keeping track of their stuff. It saves, I have, I think, what, 1 or 2 realtors who I do taxes for who have everything put together by like February 15th. And I don't think they paid taxes once with me. And because we do our tax meetings, we go through, we say, hey, okay, here's your tax liability. You know, do you need a new vehicle? We look at those things and we make sure that they are ready for that tax liability that's coming.
Yeah, just that was the why, and then how. There's some certain things that can help track these things, softwares like QuickBooks Online. There's an app called Hurdler. It's like $99 a year. You can link your bank account to it, categorize transactions, and I think there's a mile tracker on that app. There's Wave. It probably is about the same thing. I don't have any experience with it though. There's you want to separate business and personal. We always just say, hey, let's get a separate business bank account, run all your income and expenses through there. You can take out your profits as needed. That's just your owner distribution. Owner distribution is not an expense, so you're taking that out from your profits. Document all expenses. There's mileage logs, apps out there. QuickBooks Online can do it. Mile IQ, TripLog, that Hurdler app has it as well. And then organize and archive your records. So just keep things. Normally there's, for at least 5 years.
On that last one, with the IRS, you're guilty until proven innocent, and you're the one who's proving you innocent. So save your receipts, save your records, because if you get audited, they are gonna request those. And if you can't produce them,
They're gonna say sorry.
yeah.
How many years?
5. I would say 5 years. Yeah. Some people say they want to keep them for 7, or some of them keep them for 20, but at least 5.
All the current audits we've got have been like 3 years
The
prior.
past 3, so 5 is safe.
We don't really have a lot of extra time for the real life examples. With realtors, the biggest thing, again, I can stress is record keeping and staying on top of your stuff. I think this year, just amongst realtors, I was able to save $350,000 in taxes amongst 3 realtors. And that was because of, cost segregation, which we didn't really go over, but that, deals more with your rentals and things like that. That deals with being able to, write off certain vehicles because they use it every single day. So if you have your stuff put together, your tax person is gonna love you, and you're gonna love that you are saving thousands and thousands and thousands of dollars on taxes.
Conclusion, this is just kind of summary of what we talked about. Keep your records of income and expenses, meet with tax preparer before the end of the year so you can determine your tax obligation and your specific situation. Invest in yourself and the business to limit your liability, and stay organized and file your taxes on time.
And quick, before we finish up, so what we're doing with Keller Williams agents, we are actually going to be offering a special pricing for all Keller Williams agents who are here, who are online, and who, happen to join the team or happen to come in throughout, till the end of the year. If you guys already have a tax professional, great. Like, I'm not saying you should choose us over them. You need a tax professional in your corner, whether that's, your own, whether that's us. Get somebody who knows real estate, get somebody who knows your situation, who can provide the correct strategies and everything like that to benefit you. Some people take a, box approach, find somebody who's willing to go outside of the box, who's willing to look specifically at your situation, because you will find that's where your savings are at. So, people who don't have LLCs, we're doing 25% off on setting up all the LLCs. As far as like registration with the IRS, Secretary of State, Missouri Department of Revenue. If you want your own operating agreement, do your own operating agreement. If not, get an attorney. We're gonna get 25% off on first year tax returns with us. So if you are looking for a new tax person, if you don't have one, if you come see us this year, I'll cut 25% off your bill just like that. And then the other one is we're offering a 1-hour free consultation for any Keller Williams agent too.
So I know we gotta shut the recording down here pretty quickly. My favorite slide is the last one each time that says, what's your action items? I'm gonna give you 2 action items. Number 1, like we fill up for sale by owner, you need to have a professional helping you to make the maximum amount of money. You need a tax person helping you. And you've got 73 days, I think it is, till the end of the year. So find somebody, visit with somebody so you can get this year taken care of before next year starts. And that way you're on a clean slate on that. Here's another thing. So you said some people have all their stuff to you by when?
February 15th.
Okay, guess what date I have my stuff ready?
Oh, my.
January 1.
January 1. And I'm thrilled to show my systems to anybody. I don't have my W-2s in yet, all those things you get like that. Everything else, the minute December 31st closes, it's done. All my documents are there and ready. So I would love to show you how I do it. It's half digital, half old school. My mileage log is still a piece of paper in the car. So it does, the best way to use is the way you're gonna use. Okay, so I'd be thrilled to show you my bill notebooks. I have them back to 2007, my first year in real estate. And you see how they've changed and how I track everything from, and our Keller Williams technology. It will show you how much you made on every single deal you do. So we'd love to sit down with you and help you with all that kind of stuff.
And even if you're a solo agent, it's really important to have a team, and your team consists of your CPA, your attorney, your insurance provider. Like, those aspects are very crucial to your success and ensuring that you're maximizing the most amount of money that you're able to make too. So thank you both so much. That was awesome.
Can you hang around a few minutes after?
Yeah, absolutely. We'll be here for till 11. We were supposed to be here a little earlier, but we'll be here till 11. to
So if you
answer
have questions, I'll be here to help you. Reminder, next week, there is no team meeting because we're all gonna be at the Regional Heartland Summit in Branson, which is going to be incredible. So make sure you've registered for that. Don't forget the Halloween chili trunk cook-off. I'll get all those words in there.
Thursday.
This Thursday and several classes this week. Anything
Yeah,
else?
and if you are planning on attending family reunion, the early bird pricing was extended till the 31st, so get registered for that. They extended it now that they announced it
How
on
much is that
Labs.
early bird pricing?
I don't remember off the top of my head.
It's $6.99 versus $7.99. It's like
Yeah.
$100 off.
Yeah, so feel free to get registered for all that before we get started.
All right, thank you all for being here.
Thank you,
those
guys.
of you online.
guys.
We'll see you later.